What if I told you the silver market is about to change in ways we've never seen before? Right now, something extraordinary is happening beneath the surface of global markets, and most people have no idea what's coming. The silver price isn't just fluctuating anymore. We're witnessing fundamental shifts that could alter this precious metal's value trajectory for decades, possibly forever. Major industries are consuming silver at unprecedented rates. Electric vehicles, solar panels, and advanced electronics are devouring stockpiles faster than miners can extract it. Meanwhile, central banks worldwide are making moves that historically precede massive precious metal rallies. But here's what really matters. The supply-demand equation for silver has reached a critical tipping point. Industrial demand is colliding with investment demand while above-ground supplies continue shrinking. Some analysts are calling this the perfect storm scenario, one that could send silver prices to levels that seem impossible today. Whether you're a seasoned investor, someone curious about precious metals, or just trying to protect your wealth in uncertain times, understanding what's happening to silver right now could be one of the most important financial insights you gain this year. Disclaimer: this video is for educational and informational purposes only and should not be considered financial advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions. In the next few minutes, I'm going to break down exactly why experts believe silver's pricing structure may be permanently altered, what's driving these historic changes, and what it means for your financial future. If you're ready to discover why silver might never be the same again, smash that like button and let's dive in. So let's get right into this because time is absolutely critical here. I've been tracking precious metals markets for years now, and I have to tell you, what's happening with silver right now is unlike anything I've witnessed in my entire career. And I'm not alone in this observation. Some of the most respected analysts in the commodities world, people who've been doing this for 30, 40 years, are sitting up and paying attention in ways they haven't since the early 2000s or even the 1970s. That should tell you something right there. But before we dive into the specifics of what's changing and why this might be permanent, I need you to understand something fundamental about silver that most people completely overlook. Silver isn't just a precious metal like gold. It's not just sitting in vaults waiting to be admired or used as a store of value. Silver is arguably the most important industrial metal on the planet right now. And that dual nature as both a precious metal and an industrial commodity is exactly what's creating this unprecedented situation we're witnessing today. Think about your smartphone for a second. Right now, you're probably watching this video on a device that contains silver. Your laptop, your television, your car, especially if it's a newer electric vehicle, they all contain silver. Solar panels that are being installed by the millions across the globe every single year, absolutely packed with silver. Medical equipment in hospitals, silver. Water purification systems, silver. The list goes on, and here's the kicker. There is no substitute for silver in most of these applications. Scientists and engineers have tried for decades to find cheaper alternatives, and in the vast majority of cases, silver remains irreplaceable because of its unique properties. Silver is the most conductive metal on Earth for both electricity and heat. It's the most reflective metal. It has antibacterial properties that make it invaluable in medical applications. And it's ductile and malleable, meaning you can work with it in ways that are incredibly useful for manufacturing. When you combine all these properties into one element, you get something that modern technology simply cannot function without. And that's where our story really begins. For decades, the silver market operated in a relatively predictable way. Miners would extract silver from the ground, industrial users would consume it, investors would buy some, and the price would fluctuate based on supply and demand dynamics that, while complex, were at least understandable. But something has fundamentally shifted in recent years, and it's accelerating at a pace that's frankly alarming if you're trying to secure physical silver, or incredibly exciting if you already hold positions in this market. Let me paint you a picture of what's happening on the demand side first, because this is where things get really interesting. The global push toward green energy and electric vehicles isn't just some political talking point or distant future scenario anymore. It's happening right now, and it's happening fast. Governments around the world have committed trillions of dollars to transitioning away from fossil fuels. The European Union, the United States, China, India, virtually every major economy has set aggressive targets for renewable energy adoption and electric vehicle penetration. Now, what does this mean for silver? Every single solar panel installed requires silver paste for the photovoltaic cells that convert sunlight into electricity. On average, a typical solar panel uses about 20 grams of silver, and we're not talking about installing a few thousand solar panels here and there. We're talking about a global installation rate that is projected to reach hundreds of gigawatts of new solar capacity every single year for the foreseeable future. Do the math on how much silver that requires, and the numbers become staggering very quickly. But solar is just one piece of the puzzle. Electric vehicles are the other massive demand driver that's completely reshaping the silver market. A typical internal combustion engine car uses somewhere around 15 to 28 grams of silver. Not a huge amount, right? But an electric vehicle uses anywhere from 25 to 50 grams of silver, and high-end EVs, or those with advanced autonomous driving features, can use significantly more. Some estimates put certain luxury EVs at over 80 grams of silver per vehicle. Now multiply that by the millions of electric vehicles being produced and sold every single year, with projections showing exponential growth over the next decade. China alone is producing and selling millions of EVs annually now. Europe is rapidly transitioning its entire auto fleet. The United States is pouring hundreds of billions into EV infrastructure and manufacturing. And it's not just passenger vehicles. Electric buses, electric trucks, electric delivery vans. The entire transportation sector is electrifying, and every single one of these vehicles requires significantly more silver than traditional vehicles. Then you have 5G infrastructure build-out happening globally. Every 5G cell tower, every 5G device requires more silver than previous generation technology. The Internet of Things, with billions of connected devices coming online, all need silver in their circuitry. Medical technology is advancing rapidly, with silver playing crucial roles in everything from wound care to diagnostic equipment to implantable devices. The demand side of the equation is exploding in ways we've never seen before, and there's no sign of this slowing down. In fact, it's accelerating. Now you might be thinking, okay, demand is increasing dramatically, but surely miners can just dig up more silver to meet this demand, right? And this is where we get to the supply side of the story, which is equally fascinating and even more concerning for anyone who understands the implications. Here's something most people don't realize about silver mining. Only about 25% of silver comes from primary silver mines, meaning mines where silver is the main product being extracted. The other 75% of silver production comes as a byproduct of mining other metals, primarily copper, lead, and zinc. This means that silver supply is largely dependent on the economics and production levels of these other metals, not on silver's price alone. If copper prices are low and copper mines reduce production or shut down, silver supply drops even if silver prices are high. This creates a unique situation where silver supply is relatively inelastic compared to demand. Mining companies can't just flip a switch and produce more silver when prices rise. Opening new mines takes years, sometimes a decade or more, from initial exploration to full production. It requires massive capital investment, navigating complex permitting processes, building infrastructure in often remote locations, and dealing with increasingly stringent environmental regulations. And here's another critical factor. The easy silver has already been mined. The high-grade deposits that were economical to extract decades ago are largely depleted. Today's silver mines are dealing with lower-grade ore, which means they have to process more material to extract the same amount of silver. This increases costs, requires more energy, and makes the entire process less efficient. As a result, the marginal cost of producing silver has been steadily rising, which puts a floor under prices that's considerably higher than it was 10 or 20 years ago. But it gets even more interesting when you look at what's happening with above-ground silver supplies. Unlike gold, where the vast majority of all gold ever mined still exists in some form, silver gets consumed. It gets used up in industrial applications and is often not economical to recycle. When silver is used in tiny amounts in electronics or as silver paste in solar panels, the cost of recovering and recycling that silver often exceeds the value of the silver itself, so that silver is effectively gone from the supply pool forever. For decades, we had these massive above-ground silver inventories built up during periods when supply exceeded demand. These inventories acted as a buffer, smoothing out price movements and ensuring adequate supply even when mine production fell short. But those inventories have been drawn down dramatically over the past decade. The Silver Institute, which tracks global silver supply and demand, has reported persistent deficits in recent years, meaning industrial and investment demand has exceeded total supply, including recycling. Those deficits have been filled by drawing down existing stockpiles, but there's a limit to how long that can continue. Some analysts estimate that easily accessible above-ground silver inventories are at multi-decade lows. When these buffers are depleted, which could happen in the next few years if current trends continue, the market dynamics change completely. Without that cushion of inventory to absorb supply shortfalls or demand spikes, silver prices become much more volatile and structurally have to rise to a level that either incentivizes dramatic increases in mining production or destroys enough industrial demand to bring the market back into balance. And given how essential silver is to technologies that governments are mandating be adopted, that demand destruction scenario seems unlikely. Now, let's talk about the investment and monetary aspects of silver, because this adds another entire dimension to the story. Throughout human history, silver has been money. For thousands of years, silver coins were the primary medium of exchange for ordinary commerce in most civilizations. Gold was for large transactions and stored wealth, but silver was what people actually used day to day. That monetary heritage never completely disappeared, even in our modern era of fiat currencies. When people lose faith in government-issued paper currencies, when inflation erodes purchasing power, when geopolitical tensions rise, investors historically flock to precious metals. We've seen this pattern play out repeatedly throughout history, and we're seeing signs of it happening again right now. Central banks around the world have been on unprecedented money-printing sprees since the 2008 financial crisis, and that accelerated dramatically during the pandemic. The money supply in major economies has expanded by trillions upon trillions of dollars, euros, yen, yuan, you name it. This massive monetary expansion has consequences. Inflation has returned with a vengeance in ways we haven't seen in 40 years. Even as central banks claim they're fighting inflation, the structural factors driving prices higher, supply chain disruptions, deglobalization trends, energy transitions, demographic shifts, these aren't going away quickly. Ordinary people are watching their savings lose purchasing power in real time, and they're looking for ways to protect their wealth. Silver offers a unique value proposition in this environment. It has the monetary heritage and precious metal status that makes it a store of value, but it trades at a much lower price point than gold, making it accessible to average investors. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has historically averaged around 50 to 1 over very long time periods. In recent years, it's been considerably higher, sometimes reaching 80 to 1 or even higher. Many silver investors see this as an indication that silver is significantly undervalued relative to gold, and as that ratio normalizes, silver would need to appreciate substantially just to return to historical norms. Investment demand for physical silver, silver coins, silver bars, silver ETFs has been surging. Mints around the world have reported unprecedented demand, often struggling to keep up with orders. Premiums over spot price for physical silver products have remained elevated for extended periods, indicating tight supply in the retail investment market. When investment demand kicks into high gear, it can dwarf industrial demand. If even a small percentage of investment capital globally decides to allocate to silver, the relatively small size of the silver market compared to stocks, bonds, or even gold means that prices can move dramatically. And here's something else to consider. The financialization of the silver market through derivatives, futures contracts, and various paper silver products has created a situation where the amount of silver traded on paper far exceeds the amount of physical silver that actually exists. This has led to persistent allegations of price manipulation and suppression, with major banks actually being fined hundreds of millions of dollars for spoofing and manipulating precious metals markets. Whether you believe manipulation is ongoing or not, the fact remains that there's a massive disconnect between paper silver trading and physical silver availability. What happens if confidence in these paper silver products erodes? What if investors increasingly demand a physical delivery rather than cash settlement? The system could face a serious strain, potentially leading to a situation where the paper price and physical price decouple significantly, or where the price has to rise substantially to incentivize holders of physical metal to sell. We've already seen glimpses of this during periods of high demand when premiums spike and delivery delays extend. If that becomes systemic rather than temporary, the implications for silver prices are profound. Geopolitical factors are also playing an increasingly important role in the silver story. As tensions between major powers intensify, as supply chains are reconsidered and reshored, as countries seek to reduce dependence on potential adversaries, the strategic importance of critical materials, including silver, is being reassessed. Silver isn't just a commodity anymore in the eyes of policymakers. It's a strategic resource essential to national security, economic competitiveness, and technological advancement. Countries are beginning to stockpile strategic materials. They're investing heavily in domestic mining and refining capacity. They're securing long-term supply agreements with allied nations. This represents a fundamental shift from the globalized, just-in-time supply chain model that dominated for decades. When governments get involved in markets as buyers and stockpilers, rather than just regulators, it changes the dynamics completely. Government demand is relatively price insensitive compared to commercial demand. National security concerns override cost considerations, which can lead to sustained buying regardless of price levels. China has been particularly aggressive in securing silver supplies, as it has with many strategic commodities. As the world's largest manufacturer of solar panels, electric vehicles, and electronics, China's silver demand is enormous and growing. At the same time, China has been diversifying its foreign exchange reserves away from dollar-denominated assets. While gold has gotten most of the attention in this regard, silver also fits into a broader strategy of holding real assets rather than paper promises. Let's talk about the price implications of everything I've just laid out, because this is ultimately what everyone wants to know. Where is silver headed, and what does forever impacted really mean? I'm not going to sit here and give you specific price targets or timelines, because anyone who tells you they can predict exactly where silver will be at a specific date is either delusional or dishonest. Markets are complex adaptive systems influenced by countless variables, many of which are unpredictable. But what I can tell you is this: the fundamental supply-demand dynamics have shifted in ways that appear structural rather than cyclical. This isn't just a temporary spike in demand that will fade when the economic cycle turns. The transition to renewable energy is driven by policy mandates and technological momentum that will persist for decades. The electrification of transportation is similarly locked in by regulatory requirements and massive infrastructure investments. The proliferation of electronics and smart devices shows no signs of slowing. These are secular trends, meaning they're long-term structural changes in how the global economy functions. On the supply side, there's no quick fix. You can't just decide to produce significantly more silver and have it happen overnight. The mining industry faces challenges from declining ore grades, rising costs, regulatory hurdles, and long development timelines that all constrain supply response. And the depletion of above-ground inventories means there's less buffer to absorb supply shortfalls or demand spikes. When you have demand that's structurally increasing due to irreversible technological and policy trends, and supply that's constrained by geological and economic realities, the only variable that can adjust to bring the market into balance is price. Prices must rise to a level where either supply increases enough or demand decreases enough to match available supply. Given the essential nature of silver in modern technology and the constraints on supply growth, that equilibrium price is almost certainly significantly higher than where we are today. What does forever impacted mean in this context? It means we may be entering a new era where silver is repriced permanently higher based on its scarcity relative to its indispensability in modern life. Just as oil was repriced higher permanently after easy conventional reserves were depleted, just as rare earth elements have been repriced based on strategic importance and supply concentration, silver may be undergoing a similar fundamental revaluation. The old price ranges that characterized silver for decades may simply no longer be relevant in a world where structural demand has increased by orders of magnitude. This doesn't mean silver goes up in a straight line. Markets never do. There will be volatility, corrections, periods where prices consolidate or even decline. But the underlying trajectory, the baseline around which prices fluctuate, may have shifted permanently higher. And if we reach a point where physical scarcity becomes undeniable, where shortages emerge in critical applications, where the disconnect between paper and physical markets becomes untenable, we could see price movements that shock even seasoned market observers. So what should you take away from all this? First, understand that what's happening with silver is a big deal. This isn't hype or speculation. These are fundamental changes in global markets driven by massive technological and economic shifts. Second, recognize that silver's dual nature as both an industrial commodity and a monetary metal makes it unique. It offers exposure to both technological growth trends and monetary uncertainty hedging in a single asset. Third, if silver interests you as an investment or wealth preservation tool, do your homework. Understand the risks, the volatility, the different ways to gain exposure, whether physical metal, mining stocks, ETFs, or other vehicles, and make decisions appropriate for your personal financial situation. I want to be crystal clear here. I'm not your financial advisor. I can't tell you what to do with your money. But I can tell you that ignoring what's happening in the silver market because it seems like just another commodity is probably a mistake. The forces at work here, technological necessity, supply constraints, monetary concerns, geopolitical tensions, these are some of the most powerful drivers in modern markets, and they're all converging on silver simultaneously. That convergence is what makes this moment potentially historic and what leads serious analysts to conclude that silver's price may forever be impacted by what's unfolding right now. The silver market of 10 years from now may look completely different from the market we've known for the past 50 years, and positioning yourself to understand and potentially benefit from that transformation could be one of the smartest moves you make.